Howdy, Jacob here. Today we're looking at Sprinklr, 2.4 billion market cap, 1.8 billion enterprise value in the software industry. Been around since 2009, a very novice company, and they operate unified customer experience management platform, software that enables customer-facing teams to collaborate across internal silos, communicate across digitals, etc. Their growth has been very impressive, but again, we're going to have to create a story on earnings since they currently don't produce any operating profit, but they do have a very high gross margin. So again, once a company becomes, if they're able to become an elder company that's more stable with this high of gross margin, they'll likely be able to churn and burn a lot of cash flow out to the shareholders or reinvest into themselves. But at this point, they're still reinvesting heavily for growth, which in turn is not creating a lot of earnings. We'll see on the free cash flow statement later, though, what the free cash flow looks like. They are investing a bit in R&D, almost triple in R&D of the last 4 years, and over double revenue. They're looking at over 10%, about 15%, maybe 12%, 13% of revenue is expensed as R&D. And that would, if they were to cut that in half, you're looking at over 10% revenue or 10% operating profit, net income. Not bad. Balance sheet has 663 million cash-like products with no long-term debt, no short-term debt, 543 total liabilities. So we're looking pretty good here on the balance sheet. No concerns whatsoever. They do issue a bit of shares and options through stock-based compensation, but that does produce them a good amount of free cash flow with very low capital expenditures. It doesn't take much to keep the business's lights on, essentially, which we can see through $9 million in capital expenditures. It is up quite a bit from 4 years ago, up a bit from a percentage standpoint. It's only up $6 million, but they're definitely on the increase of margins on the both net income side as well as the free cash flow side. And their use of cash is still heavily reinvesting back in themselves. We'll see if they have a good return on invested capital to be able to, again, their current return on invested capital is swayed down because they don't make much profit, and that's what the numerator is in the return on invested capital. But once they start producing good earnings, more consistent earnings as a mature company, they will see whether they're able to return good money to the investor with their reinvestments. Jeez, I could not think of words. They do buy back a little bit of shares, so it's really just share repurchases and reinvestments at this point. So let's start making some assumptions here. On the revenue growth side, I think I would not be surprised if they were to sustain maybe 15% a year. They are heavily reinvesting back in themselves. And again, I'm creating a story here, so I'm going to want a little bit extra return, but I think that they could probably do anywhere from 10 to 15% on a range here. For share repurchases, 1% is 23 million, but they do off stock-based compensation, so let's just say they offset that, and probably a 25 future PE at this point. And we're saying the company's stock price needs to fall 22% before you get the return we look for here. It could be interesting. I mean, this is with a 17.5% return. They obviously have not produced these margins ever, but you have to create a story around a company that's so heavily invested, and with the margins as high as over 70%, gross margins as high as 70% that they have, and a research and development expense of 10 to 15% of revenue. I mean, I think it's possible for them to get these type of margins at the end of a 7-year period and even still have a lot of growth rate ahead of them. So I'm going to probably not too much longer do some research into this industry, into this company, and see whether I feel comfortable with these assumptions or not. But right now, it does look like a pretty interesting company and a pretty interesting deal in my perspective. Hope you enjoy the video of yours today. Thanks.